Well, good morning. It's Monday the 27th of October and this is the Data Explorers Securities Lending Daily Update. I'm Ed Oliver. So as always on a Monday morning, what do you expect when you come in? Well, pretty weak overnight and lots of stories over the weekend to talk about that will be affecting markets over the coming days. First of all, overnight, Japan hit its lowest point since November 1982. The Nikkei 225 down 6.4%. Hong Kong down substantially overnight as well. One positive point was Korea. They cut interest rates by 75 basis points and that had an impact on the capital market in Korea, on a positive impact in Korea overnight. What else are we looking for this week? Well, lots of talk about bailouts and IMF loans. IMF loans confirmed to Ukraine and Hungary. Likely spots for future loans include Pakistan, Latvia, Venezuela and Belarus. Also, lots of comments over the weekend about the insurance companies and the impact that they may have over the coming few days. The US insurance companies, including names like MetLife and New York Life, have all approached apparently the US Treasury looking for part of the bailout fund there. The US Treasury also confirmed over the weekend that the UK insurers such as Aviva and Prudential will be unable to benefit from the US bailout, saying that that is for federal authorised companies only. Other bailout discussions over the weekend included the Dutch insurer Aegon, who apparently are in discussions with the Netherlands authorities about access to some of the bailout funds that are available to Dutch companies. So those sorts of talks will continue over the next few days and will have an impact on those insurers. What else do we have? Well, emerging markets were very much in the news at the tail end of last week, continue to be this week as well. Those companies that have significant exposure to the emerging markets likely to see some viewpoint on their shares as a result. We saw HSBC and Standard Chartered both fall substantially at the tail end of last week. So we'd expect to see some impact on their share prices as more news comes out of the emerging markets over the coming few days. Also, those companies, particularly in Italy, Austria and Switzerland, that have exposure to the Eastern European markets are likely to be affected by some of that. And we expect to see the names such as Allianz and Deutsche Bank to be down as well as a result of some of their loans and exposure into those markets too. What might make a big difference this week is interest rates again. The Fed are meeting on Wednesday and it's widely expected that they will put in place a 50 basis point cut, reducing their percent. Talk this weekend that those cuts may well be consolidated with other leading central banks, including the UK and the ECB, and that consolidated approach to interest rate cuts that worked so well earlier on in October may well come into play again this week. And finally, worth noting from a securities lending perspective that overnight in Japan, the regulators announced that they'll be applying a ban on naked short selling from November the 4th until the 31st of March next year. Will also include a requirement for disclosure on short sale positions that are greater than 0.25% of a company's issued shares. So that came in overnight and we'll continue to monitor other short selling restrictions as we go through the coming few days. So that's it for today's daily update. There'll be more tomorrow here at dataexplorers.com. Thank you and have a good day.